the screen, blood starts to dance. Tickets run wild like a snake in the grass. Fingers twitch fast, orders thrown in. Dreams on the line, world spinning again. Shots like a maze, my head's on fire. Failure whispers, but I aim higher. Pop test gates trying to shake my pride. Won't stay down, I'll break the tide. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick. Test after test, I'm kissing the edge. Risk and reward, I made my pledge. Futures clash, the screen's alive. Bankroll breathing, it's how I survive. Fear and greed, they speak my name. Fight through shadows, win this game. Strategy tied, I'm locked and loaded. Profit streams, my brain's decoded. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick. Ooh, I'm moody for the bag, man. Like looking at the tad, man. I'm ready for another tad. We'll keep our stand, get current now. Ooh, I'm moody for the bag, man. Like looking at the tad, man. I'm ready for another tad. We'll keep our stand, get current now. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick. Trade the chaos, make it mine. Turn the losses into shine. Grit and sweat, brick by brick. Crack the code and make it stick.
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Guys, all right. Let me add this to the stage, remove this, add this. Good evening, good morning. How's everybody doing? Somebody give me a sound check. Let me know if you guys hear me okay. If all is good. Hi, Lisa. Hi, Kevin. Everybody new, say hello to me. No direction, Lisa. Direction is for amateurs. We trade flow, baby. No idea, frankly. We're gonna see where the decision goes. Let me actually go to Financial Juice. What do we got? We got like 1 minute left, right? Here comes the just before this, by the way, Trump came out saying he's going to put a no to pulling back the tariffs. I'm sure that's going to work really, really well. 39 seconds left. Interest rate decision coming up. Nobody expects any movement. It'd be shocking if they do anything. 4.5 is where we're at. So we're going to watch that. And then we've got about a half an hour. We're just going to pause. I'm going to talk a little bit about the day structure, some other stuff. And then he's going to come on and we'll do the press conference and we'll see if we can trade the press conference. 18 seconds left. Anybody betting that there's going to be a change? It's literally, I think, 95% consensus. There's no change. Let's see what we got. Three, two, one. Sometimes it takes a while. They don't necessarily release it always on the spot. No, 4.5 as expected. No change. Usually when there's no change, there's almost like no delay. Where's the statement? Everybody waiting for the statement. Let's see what the market reaction is. Not much. Kind of flat either way. Not much going on over here. Let's go see if we got the statement. Committee judges risks of higher unemployment and higher inflation have risen. Okay, that's really not helpful. That means U.S. says it's asked for a trade meeting in Switzerland. Let's see if Forex Live has the breakdown. Full statement from the FOMC, no change in policy. Where's the statement? Although swings in net exports have affected data, recent indicators suggest economic activity continued to expand, blah, 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 seeks to achieve maximum employment. Supporters' goals decided to maintain target range of 4.5. Target range. The committee will carefully assess incoming data involving. The committee will continue reducing its holdings of Treasury securities. Is strongly committed to supporting maximum employment. In assessing the appropriate stance of monetary policy, we will continue to monitor implications of incoming information, blah, blah, blah. Adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of goals. Bullshit, bullshit, bullshit. Our committee's assessment will take into account a wide range of information, including regions. So really nothing, man. That is a very plain vanilla statement. Not really saying a lot. Market, therefore, really not reacting that much. Although gold popping. I guess, it's interesting why gold is popping. I guess that they're viewing this as hawkish. But why would that be positive gold? It should be, if it was dovish, it should be positive gold. Interesting. Trying to assess if there's anything here that's dovish. The committee, I don't know whether they think that's dovish. The committees will be adjust its stance as appropriate if they impede the attainment of these goals. Interesting. Nothing I can see here. Gold is definitely popping, so got to have respect. Taking out the 3,400. The blue is still below the red, so it's still a negative trend. Only 2 green dots behind gold, so we would need a third green dot to take shape for us to take a long here. But it'd be a big chase trade here. It would really be a big chase trade here. So we're not gonna if we're gonna chase anything, it's all gonna be on a tiny little position. But it's actually not. You can see it's kind of petering out here a little bit. I think we'll stay stationary until the FOMC comes on board. Yeah, check. I think that's the appropriate description of the Fed statement. Yada yada yada. Exactly. Hey guys, welcome. Who's new in the room here? Say hello to me. Tell me where you're from. We got a quiet couple of, we got about a quiet 25, 30 minutes. Not much we're really going to do. If we see anything in the price action that would facilitate a trade, we'll, we can short this on a small basis here. Where am I? MNQ? No, I want to go to, I want to go MNQ. Hang on a second. MNQ. Where's my June? Okay, I want to trade micros here. So right now there's a little bit of a micro sell here. I want to go minus, just tiny here. I'm gonna do this. So I sold NASDAQ only because I have a tiny little position here. Again, I'm going to trade very, very small here in NASDAQ. Maybe move up here. Let's see if this is going to TP my position. Let's see if it comes into my target. Just missed me. Come on, baby. Do your thing. All right, we'll stay patient on this trade. I'm going to trade tiny little positions until we get some. There we go. That trade just TP'd right now nicely. Until we get some vibe from Jerome as to where things go. Right now, the market expectations is he's going to stay stationary. He's going to stay relatively bullish. Relatively hawkish on the position, meaning that he's not going to change rates for the foreseeable future. To be honest with you, it's not like there's really a. I know Trump's been pressing him, but it's not like there's really a huge case to be made for trades to go lower right now. Inflation is definitely tempered, but we're still, not quite in any kind of a deflationary zone. And employment has really not fallen off a cliff. And it's really until employment really comes down that the Fed is not going to be doing this. Wow, just look at this nice move. We only took a part of it. This thing really dove like a stone. By the way, a lot of people have been asking me, how do I get this layout? Let me just tell you my thought of how I created this layout, what I like doing about it. And if you guys want it, I'm happy to put it into the I'll put it into the chat room, and you guys can just, all you got to do is just simply copy that link and then import it in. Wow, look at this. We're really diving off a cliff here on NAS. Interesting. Pre-market. Maybe because the market didn't think that the Fed was going to be that hawkish. But still, I still don't understand if we're super hawkish why the gold would rally. Maybe I think it's actually, honestly, maybe this has nothing to do with the Fed, and maybe it's the Trump statement on the fact that he's going to lower tariffs. Like, this is a negative thing on the tariffs. I wonder if the market is just much more reacting to the tariff news than any of the bullshit on FOMC. Because Trump, as usual, just shooting off his mouth. We got to get long gold here, guys. Let's get long gold. Again, just going to buy this. How much time do I have left on the 55 seconds? All right. This looks bullish to me, and I got to take this trade. This would be the third green dot over here. I'll put this over here. Here's my target. Let's see if it reaches out. But this, this price action really kind of screaming for a buy. Come on, baby. Come on. There we go. That gold trade goes through. That was nice. Again, I'm trading tiny amounts just because a lot of volatility. We don't really need to trade large size when you have a lot of volatility. But I'm trading very much with trend. I'm not going to, I'm trying not to trade counter trend. So in this case, trend really, you can really see that this was flat and started to go up, right? Even though the short-term moving average is not below the long-term moving average, it's curled up. It's close enough for government work. We've had 2 green dots. This is the third one. I decided, let's take it. We did it. Okay. Anyways, you guys want the layout that I have on wealth charts? Let me give it to you. I got to go over here. I got to go to layout menu. I got to go to export layout, and this is the link. And I'm going to put the link in here. You guys just simply copy that link. It's in chat. Copy that link. I should actually, hang on a second. Let me do wealth charts import link for Boris layout. Okay. And you guys can import that into your wealth charts if you wanted to. If you guys want to get wealth charts and you want to get everything, Apex now has an 80% deal off. So I'm gonna do this offer one more time here. Everything we do, plus I'm gonna buy you 3 free prop accounts. I will totally subsidize it. So it'll be a bigger discount than even this price. I just put the link in there. If you want everything we do, all the indicators, all the wealth charts indicators, all the trading view indicators, everything, and 3 free prop accounts, 50K prop accounts. I'll buy them all for you for this deal. So be my guest. Have a great time. Enjoy. Let me organize this. Let's see what everybody on Twitter is saying. I'm just curious. So what are we saying here? Traders continue to see Fed rate cuts likely as July. Slight pair of earlier losses after Fed stance path. Blah, blah, blah. Not much over here. What's Forex Live saying? Trump says he's an open. This is, I think, a much more interesting story to get them to the negotiating table. That could make for a short meeting on the weekend. Maybe. Or is this the same? I can't tell. Was this the same statement? Looks like it's the same statement. The tariff news would explain the dive in NASDAQ and the ramp in gold. Sorry, link not working. What is that? Link not working. You have to import. To import, you don't actually. You have to go in here. You go to layout menu. You go import layout, and you press that link. Is that not working for you guys? You know what? Hang on. Let me try something. I'm going to save this. I'm going to save this layout. Let me see if maybe that's the problem. Let's try this one more time. Layout, export layout, copy. Try this. See if this link works for you guys. We don't have much to do. All the Besant bump, which went to 20,000 yesterday, kind of been a little bit unwound. Let's see what the Fed has to say. But honestly, I think Trump is overshadowing whatever Fed is going to do, unless the Fed is going to say, yeah, we're going to be kind of dovish. So we'll see. Anybody trade this morning? You guys trade anything this morning? I was really kind of, off the grid. Although I will say this, guys. Here's an interesting thing. I'm going to show you something while we're waiting. I'm going to go into my trading view. Sorry, where's my trading view? Charts. I want to show you something interesting. So look at this. Remember I had two accounts that I needed to fund it. This is 53. The other one I already funded it yesterday at 50. So I literally have three funded accounts now. The 150,000. This 50,000 is going to become funded tonight, and this one has already been funded. To 50,000. I'm going to start. But let me see if I can actually hang on. I'm going to do this off screen because I don't want to confuse you guys. Let me see if I can pull this up. Go into my Apex account. If I can pull this up, because I want to show you something really cool about what I've been doing. Let me see eval chats. What is this? Stop days. Okay. Yeah, this is kind of interesting. I'll just show this to you. So, okay, I go back into this is the two $50,000 accounts. This one I want to show you. Look at the length of trade in these two. This one is already funded. So this 73 has already hit the 3,000. It's just hasn't updated because it's going to update at 5 o'clock, right? Look at the length of days. 4 days for that one, 2 days for this one, right? On the accounts. Like, how do you pass an account in 3 days? That will be the subject of my coaching tomorrow night. So if you guys want to have the coaching, get this deal over here, and I will be happy to have you in coaching. It's gonna totally change your perception of what we do on a day-to-day basis. It's gonna be really, really interesting. Because I'm gonna try and do the same thing with the wealth charts accounts as well. And I think you'll find what I'm doing super fascinating. We're going to use the exact same. I'll just tell you this. There's nothing new in terms of strategy. We're going to use the exact same tools, exact same techniques, but there'll be just one key difference that we're going to do that I think is going to make, you'll be able to fund the account in 2 or 3 days continuously. And think about that. That means, especially now with Apex, if you go out there, go buy some Wealth Charts accounts from Apex, and be sure to do that, by the way. If you buy the Wealth Charts accounts, you get that deal. You'll be able to have everything on the Wealth Charts indicators. You can fund like 10, 15 accounts separately, not the bullshit, one trade through trade copy or 20 accounts, which is fine. That works sometimes, but it's also very expensive because if, it's like one trade and you miss it and you've blown up 15 accounts. More importantly, I'm really not a fan of, because I see this all the time on Twitter and everybody else saying, "Oh, I had 300,000 in funding and I blew it all." Of course, if you trade copying, you're going to blow it all. That's the whole point. Prop firms love it when you trade copy 10 accounts because it means one error multiplied by 10 times. But imagine having 20 separate accounts and having the power to kind of juice up your return per account. That gives you a huge amount of trading leverage as an opportunity. Will the coaching be recorded? Yes, it's always recorded. It's always going to be put up into the coaching course, so you can always watch everything on demand. Yes, absolutely. Yes. I got to tell you. Okay, so I am, as always, could be a million degrees wrong here, but if Jerome comes out and he's hawkish, and Trump is like, "No, I'm not lowering tariffs at all. Fuck you." It's completely not unfathomable to see 19,500. Like we go 200 points lower here on the move. I am, it's not an out of the realm possibility at all. So that means, I want to be focused on the shorts here when I get them. Like right now, I'm just too deep underneath the moving averages. I need this thing to go up and then give me a red dot as a short signal in order for me to be able to create a short. I want to be watching gold here because if gold kind of, gold's showing me one sell signal, two sell signals, and then it comes back up to show me a buy signal. I want to stay mildly gold. Although I will say that gold is definitely getting very tired of this. This 33 to 3,500 has been absolute cement ceiling for gold. So the short case for equities is stronger than the long case for gold right now, technically, but we'll see. We'll see how it goes. We'll see how it plays out. But anyways, it's really cool. Come to the coaching. The ability, I won't bullshit you. There's definitely trade-offs in this approach that I'm using, but it's great. Like to be able to fund an account in 2 or 3 days, like a sniper, really, really cool. I'd love to have you guys all come join me. So be sure, if everybody who's already took advantage of this deal is going to be there. Gets going to have the link. Everybody who wants to take advantage of this deal, please do so now, so that I can tell you exactly what I'm doing. Because I'm sure you'd love to be able to get the account funded faster than slower, right? If you want, if you could. Another cool thing we can do with wealth charts, which we will, because I think today especially is the day we can totally spread our bets. I'm going to go watch this. I'm going to duplicate this chart. I'm duplicating my wealth charts. One of the cool things about wealth charts is you can run multiple open Apex Trader 78. You can run multiple tabs. And each one of those tabs is tradable. In TradingView, you can't do that. You can't TradingView that. Yeah. So Michael, you have to go to each one of those websites has videos on it, especially Apex. Just simply go to Apex. They have a whole bunch of videos on how to use wealth charts and how to use Trade Evade. And wealth charts itself has videos. That's what they're there for. Okay. I don't teach you basic setups because that's not our job. The vendors themselves can teach you how to use the platforms. So please go out there, watch their videos, learn how to use it, and practice. Take small trades. By the way, anybody were you guys able to import my layout? Everybody bitches when nothing good is happening, but I don't get any love when it works. Did it work? No? Still didn't work? It didn't work. All right. Oh, fuck it. I'll have to ask him why it didn't work. I'm doing something wrong, I'm sure. The layout, I just posted the link. You just simply take the import, say import layout, and import it into the link. Nico, we're going to do the coaching. It's going to be at 7 p.m. tomorrow. 7 p.m. tomorrow. Okay. Okay. Wait. Sorry, I was focused on something. What the hell was I talking about? Now I totally lost my train of thought. Fuck. What were we talking about? Turns, trades, coaching. I was looking for shorts. I was looking for longs on this thing. So I'm looking for a red dot on NASDAQ for shorts here. And I know what it was. I was looking for S&P. That's what I want to do. I want to change this to S&P. So we're going to go to MESM June. That's what I wanted to do. So this second tab is a layout to the S&P, which we could also trade. So we'll trade that as well. Okay, which is very cool. Gives us a chance to trade both. And now I'll transfer over to NASDAQ. We'll see what either one of those things works. Gold is not a short for me because I don't have 3 red dots on gold here. I only have 2s. So I can't really legitimately take a short here. But Rick took a short. He got it done. May actually have 3 green dots reversal on NASDAQ. But honestly, guys, it's 225. By the way, cool thing is I actually have the Fed conference, and I think I'll be able to we'll be able to play its sound and do everything. I'm gonna once he comes online, I'm gonna reshare this link, and we'll be able to. I think you guys will be able to hear him. Hopefully, the technology works for me. We'll see what he has to say. Okay. Rick says he always trades the first reversal dot. That's very brave of you. But if it works, great. Actually, may have. Remember, I only take reversals if there's 3 consecutive counter trend dots. In this case, trend is negative, so I need 3 consecutive green dots. Excuse me. So far, $1.32 on the clock yet. We don't have a green dot. So if this goes green dot, we'll go long just for shits and giggles, small size. See if we can resolve the trade. Let's see how it works. But basically, we're all twiddling our thumbs, waiting for Jerome to come on board and talk to us. So, is it like the middle of the night anywhere that are there people from where? I guess it would be, Asia is like middle of the night. Anybody from Asia watching this? Like 2:00 in the morning for you guys, doing the insanity. Anybody from the Middle East, by the way? Like, what time is it in Dubai right now? Anybody from Dubai right now that are watching me? Or Qatar? Tony, you're in Qatar? What time is it in Qatar? 9:30 p.m. Oh, wow. India, it's 12 a.m. Okay. Wow, Tony, I had no idea you were in Qatar. I always thought you were in Jersey. Are you like traveling or 10:30 in Dubai? Nice, nice. Oh, you're army deployment again. Okay. Yeah, I was surprised. I thought you were in Jersey. Qatar. Kay and I were in Qatar November. We're going to ACAP, and we stopped at the Doha airport. So Doha airport is the only airport I've ever seen that has not 3G, not 4G, not 5G, 6G internet. So I FaceTimed the girls in New York, my wife and my daughter, and the FaceTime was so sharp, I could literally see the pores on their faces. I was blown away. 6G is insane. That was the first time I ever seen 6G, wireless network. It's crazy. Okay. All right, so a lot of people in Asia, but it's not so bad in Asia. It's not. I thought for some reason, I guess Hong Kong would be like totally the other side of the moon, but everybody else is like nighttime, but not unreasonable. It's not like middle of the night for you guys. Where are we at? Oh no, we still got time. I'm looking. I'm trying to see what time it is right now, but it's hang on just one second, guys. God damn it. Okay. Oops. Looks like we're spiking over here on NAS. That'll be a triple green dot. This is a big chase trade. I'll be the first. I'm taking tiny position on this because I have like 50% confidence that this thing is actually going to be a good trade, but we'll give it a shot. Why not? We're going to wait until the candle closes because I want to make sure that this stays above the highs and the green dot is legit. And it shows up. Well, it looks like it's pretty legit. All right, 89 seconds, good enough. We'll buy this. All right, so we're gonna stay 2 candles back, pretty much over here. See if I can take profit over here on this move. Will this really extend? I can't fucking believe it. This is a big V-shaped move. If this makes take profit, I'd be shocked. But I'm taking a trade because it's a setup trade, and I want to show you the techniques. I mean, the key thing is to for you guys to learn the cooking techniques, so you yourselves can start making these dishes at home. These trade profitable dishes. There's actually a 3 dots on gold. Same idea. We want to go short here on gold. Because it's a 3-dot reversal off of a positive trend. And let's put target over here. Let's see if we can make a little target here. So pretty much counter trend trades in both. First of all, fair warning, counter trend trades far less accurate than trend trades. But if you're going to do them right. Do them when there is actually evidence of a counter trend. And for our purposes, evidence of a counter trend is when we have at least 3 counter trend dots in the same direction to give us a modicum of confidence that the flow of the market has changed. The flow has changed the other way. Do I use 1 micro per trade? Same for gold. And yeah, same. It's micro, baby. Micro. Pizza. I mean, this is bull. This is very, very tiny bullshit. It's just, as I said, mainly to show you technique, and also because there's no need to get in front of the presser. Let's see if this is good doing anything right now. No, he's still not showing up. So this is live. Oh, there he is. Okay, so I'm gonna try something, guys, and we'll see if this works. All right, just bear with me. I'm gonna try something. You're not gonna be able to hear this. I'm trying to see if I can actually hear it myself. Why don't I hear him? Oh, there it is. Tell me if you guys hear it. If you do, then I'll leave it alone. Yes, no, do you hear it? No. Okay. All right. So let's try this.
In support of our goals, today the Federal Open Market Committee decided
about
to
now?
leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy
Okay.
leaves us well positioned
So
to respond in a
we'll
timely
listen to
way
Jerome for
to
a second.
potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes
Just to let you guys know, both of my trades worked out. Okay, I'll
grew at a
update you when we
solid
come back.
3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures.
Okay, that's kind of
Inflation has
positive.
eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based
Let's hear
measures.
the press conference. Yeah,
Survey
sure.
respondents, including consumers, businesses, and professional forecasters, point to
You
tariffs
guys don't
as
hear
the
the press
driving factor.
conference?
Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual
Gold is
mandate
neither
to
buy
promote
nor
maximum
sell right
employment
now.
and
There's
stable
no
prices
signal
for
yet
the
on gold.
American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet.
Okay.
The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizon.
Now, just to let you guys know, usually the price isn't going to move until he goes into Q&A. Right now, he's basically, regurgitating everything that everybody knows. He says, we don't know what we're going to do. We don't know if the tariffs are going to be inflationary or not. Everything is moderating nicely. We're staying pat, but we're open to moving either way relatively soon. This is I would say, a more dovish statement than what the market expected, which is why the market is rallying. The market really thought he was going to be hardcore hawkish, but he's being relatively, sanguine about the whole thing. So let's see what he's got to say.
Ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data.
To be in a hurry is a takeaway.
The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Interesting. You don't need to be in a hurry. It's kind of not going to do it. Why?
Around 2021 and supply shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
Interesting.
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing.
This is like a really interesting takeaway. Basically, he's saying, listen, nobody knows exactly, how this is going to shake out. But we're in such a good position now that we don't have to preemptively cut rates. And that is why it's kind of interesting. It's more of a little bit of a more hawkish stance. It's not uber hawkish, but it's one that basically pretty much the conventional view that they're not going to do anything until July seems to concur that. Seems to pretty much say that's really what's going to happen unless something radically changes here. Let me see. Oops. I don't want to subscribe to the Fed. Where's my thing? How did I? Here we go.
I mean, that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we
my
are.
layout link, guys.
To go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
So he's going to stay stationary. That's basically it. No matter what they do to him, he's not going to move off that policy stand.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
You know, so first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well.
I'm selling a little bit of gold here,
Participation,
guys.
I mentioned it at a good level. So, you know, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a very
let me ask you guys, are you guys hearing Jerome talk? Like, do you see the chart? Are you seeing him talk? Do you still hear him saying any questions? Give me a yes or no, please. You don't hear it, right? You don't hear it anymore. Okay. All right. I'm going to switch over here to this tab just because, you know, I think he's pretty much done torturing these people. I have a sell signal here. We're going to take that over here in NASDAQ. Again, small size, just small size only today. This doesn't look like it's going to be a massively big move here. Move my target over here. Let's see if we can make a little bit of target. There we go. Just took a scalp here. I took a scalp over here on the gold. I'm doing nothing except taking trend trades so far, with the exception being that we took that counter trend just before he came onto the mic, and both that counter trend actually worked really well. And the only time you take a counter trend is when you got three counter trend dots in the same direction. 1, 2, 3. We took it long here, made money here. Now just only this is the short dot against the short trend. We took that worked here. Same thing over here in gold. Gold was a counter trend originally because 3 red dots against a positive trend that made money, and then now we turn negative trend over here. You can see this on bigger chart over here. The blue is below the red, negative trend, short signal. Should have actually taken the trade here. I was super late, but I took some over here. I shaved a little bit of trade here, and that's it. So now, now we got nothing else to do. Now we're just going to twiddle our thumbs and watch around. We'll see if Anthony says there's no direct answer, a bunch of deflections, nothing. I think, I don't know what people expect him to say. So you guys don't hear it anymore, right? Like, you guys don't hear. Let me ask you this: if I were to turn him, I'm going to turn him on, and you tell me if you hear him, because I'm going to unmute him. Yes or no? Like any conversation out of you hear Jerome at all? I'm trying to see if nothing. Okay. All right. So he's really going to refuse to answer any of their questions. Overall, I think the message from the Fed is we're doing nothing till July until shit suddenly changes. That's not positive for equities because it's obviously Fed is negative stationary on rates. It's not positive on gold either because if they're not going to cut rates, that's not really positive gold. So you see both of them coming down a little bit on a more hawkish posture, which makes sense. The negative trade here was a good signal. Really worked nicely. Oh, sorry, I'm on the wrong one. Here we are. The negative trade here worked nicely. Gold still stays negative, and now you have to be very patient and not take any unnecessary trades. We already had a lot of good trades here. We took the short here, we took the long here, took the short here. We took a long here on a counter trend, took the short here, took the second short here. So all, all good, all in the right direction, all of it working pretty well. Today's FOMC is sort of much more of a non-event than some of the other FOMCs. So we don't need to overthink it. We don't need to overdo it. We kind of just sort of stay with a trade. The near-term position is this negative trend, NASDAQ, negative trend, gold. I haven't done any trades in the S&P, but negative trend S&P too. If you took this short over here, that would have been a perfect S&P short too, if you wanted to do that. Oh, sorry, you guys are not actually seeing the S&P. I'm not showing it to you. Okay, gold showing the first green dot. Remember, you never trade a counter trend signal until you have three counter trend signals in a row. That's my rule. It's served us really, really well today, and hopefully will serve everyone, well in the future as well. So, other than that, not too bad for essentially a non-event today. It'd be interesting to see if we have any hangover on this. I'll be trading Asia with you guys, by the way. We'll be trading CFDs, so come join me 7:45 tonight. We'll see how that plays out. But honestly, this is just we're kind of just twiddling our thumbs, doing nothing. I don't think he's going to say anything new that is going to move the markets. Let's see if anybody's saying anything on Twitter that's interesting. Powell says Trump commentary doesn't affect our job at all. We haven't faced conflicting goals in a long time. Trump all cap statements due momentarily. Oh, nothing else. I'm just scanning the headlines here. Powell says that if nothing happens to alleviate the tariff situation and concerns, he expects to see that showing up in data in the next couple of months. Interesting. So he's not going to move now, but clearly, he sees the dangers ahead. Bottom line is, for today, when you're looking at the market, there is, waiting for Trump's statement. Nico is right. We're kind of waiting. We're all just kind of waiting for Trump's statement at this point, which is absolutely right. Let me see. Let me go over here and see if he's got anything else new to say.
Say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening of financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything, and then we immediately went into QT, and we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that was that little bit that we've done was too much. But I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one thing, one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the.
This is Jerome saying we don't want to have anything to do with the climate change story right now, rightly so.
Publicly several times. I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And, the risk.
So I was saying that you guys are asking me questions about, does Wealth Charts trade options? And Wealth Charts does trade options through Tasty Trade. They integrate with Tasty Trade. I recommend you guys all go to Wealth Charts. I recommend you go buy yourself a Wealth Charts account at Apex for 80% off with this link. Okay, first order of business. Then you'll have the platform. You'll know exactly what you can do with it, what other brokers you can use it with, and whatever you want to do. Okay, do you guys hear me now? Is everybody? Did everybody hear me? Yes. Give me a yes. Do you hear me? I just muted Jerome. Okay, cool.
Group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening economic activity, which translates into higher unemployment. And the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting. And so this was the meeting when we didn't do it. We don't also kind of poll people. So I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would.
I want to just share this for a second. Nas popped up on his comments, but only 2 green dots, no 3. So we're going to stay patient. If this indeed is going to be a turn signal, we'll wait for it. But right. I'm sorry. I'm on the S&P. I'm on the S&P. Let me share this one. I'm sorry. Share this tab instead. Oops. What happened? What happened to my sharing? Oops. I just lost my sharing. Hold on, guys. Share screen. Basic trading. Share. Okay. There we go. Sorry, I lost my screen. So, let's see if the market kind of just shrugged off whatever he said and went back to trying to buy the market on the assumption that Trump's going to do something. The whole idea here, frankly, is that Trump is going to announce something. We're all waiting to see what he's going to say. And the market seems to be acting on that as much more so than anything that Powell is saying right now. But we don't have 3 green dots in a row, so we don't really have a reversal signal yet. So we're going to stay patient on this. I'm going to watch this. I'm going to see if he's got anything to say here. Sell signal in gold over here, guys. So I'm gonna let this candle complete, but if the candle stays negative, I'm gonna sell it. All right, we're just ignoring Jerome at this point. We're just going to try and trade the charts from the flow that we see. Sell signal in gold, red dot, negative trend. We're going to just taking this as a possible continuation trade here. See if we can clip a little bit of P&L on NASDAQ. We keep building, but we would need this candle to really rise above the high here to give us a green dot, which actually it might be doing, but it's got a minute and a quarter on the clock. So it's really got to rise and hold. That would give us 3 consecutive green dots and give us a chance for a potential long trade. Are you guys hearing my sound? Do you guys hear me? Yes, no? Give me a yes if you guys hear me. Yes? Okay. All right. So you see what I'm doing, right? I'm just waiting for, for some directional signals. It's definitely market very, very choppy. That's why we're trading very, very small. This is the only clean signal I have right now, and it's the only one that we're taking to see how it goes. 22 seconds left on the clock. Let's see what this NQ wants to do. Looks like nobody wants to do anything for right now. So we will let it play itself out. All right, sorry guys, because I hear somebody saying no sound, and I just want to make sure. I want to make sure you guys are hearing me. He should be done talking pretty soon. I don't think he's got anything else to say. Let me just, I'll tune into him for a second while we watch this. It's interesting. Powell's like, the British reporter is trying to press him on like, we're going to go into depression in 5 days. Do you not agree? And he's like, leave me alone. I don't want to comment. Really, really funny. The NASDAQ is starting to break up to the upside. So I'm watching this candle. There's 52 seconds left. This is if this candle prints where it is now, it's a buy for us. 40 seconds on the clock. Gold literally went dead. Like gold is just not even moving. But this candle, it needs to, actually this candle just lost its signal. So nothing is really, really moving. It's just kind of staying very, very stationary. I'm really waiting for him to get off the stage because usually when he leaves, that's when you get a lot of price action. He's still talking. Not taking this trade unless this trade gives me a green dot. unless we get momentum to the upside. Let's see if it does. Yes, it does. We're going to take this buy. So we get long on this. Stop will be underneath these lows here. Going to move the target like right around here. Let's see if we can just get a little bit of a move to the upside on NASDAQ. Do you guys hear me? Does anybody you hear what I'm doing, what I'm saying? Yes? Oops, trade not working. So the gold trade is working. Gold trade works. The NASDAQ trade is retracing against me. So the triple reversal here. Still good? Thanks, Dennis. Thank you. Thank you. Thank you. So NASDAQ trade is like the only one that's kind of reversing on me a little bit. But the gold trade worked. Yeah, this looks like, this was it. Kind of just died out. This is the only one that we're probably gonna eat as a loss, which is fine. We'll wait for the next one on NAS. This was a counter trend trade. 3 very, very long dots, not a lot of movement. Fair enough. It was a legit setup. They just simply did not bank. Literally all the other setups, 6 of the setups that we trade today, all of them banked and banked well. So, no harm, no foul. Hanging in there. This is actually a sell signal over here. We're going to sell it. I'm going to sell it again. I'm going to double sell this because this is a pretty good sell signal on this potential. Let's see if we can just do a quick resolve here, get some flow back. And otherwise, I think I'm just going to leave it alone. Nope. Go to full screen on this just to kind of show you. It's really, really problematic. Like it's not really a downtrend. It's kind of like a flat trend, but I still consider that to be a downtrend. And it was a sell signal, a downtrend. So, but honestly, it's just chop. And this is one of the things that I try to pretty much avoid as much as I can. But today I'm clearly not doing a good job on the end of it here with NAS. When there's just no news and we can't getting chopped out, it tends to trigger us into sell the bottom, buy the top type of signals. The great thing is I'm going to show you how having a small size makes all the difference in the world for us to be able to resolve this. Okay, so even if I eat this trade, I'm going to on the next one I'm going to be able to resolve it. I'll show you how. If I'm in a sell trade and a green trade comes on the candle, do I stop or do nothing? Depends if the stop should be, the candle high. If it hasn't triggered my stop, I try to do nothing. Like right now, this has not triggered the high. Maybe this stays. I don't know. We'll see. I'm not holding my breath. This is very much choppy price action. It's really, really a battle between the bulls and the bears right now. So we have to, I'd like to see this thing create a directionality before I commit to the next trade here. But, right now it's really, really chopping between the two. But basically I'm waiting, if this hits my stop, it hits my stop. I'm not closing it out early. Yeah, it's really, this is a problematic trade. GFAS is right. He's saying this really wasn't a trend trade. It was kind of right on the cusp, and we still don't really have a clean trend here. So to determine where a trend trade is, it was kind of a downtrend, but not, it was sort of like a neutral trade. So I took it as a trend trade, thinking there was going to be some continuity. And it just stalled. And right now you see everything basically is stalling. The trend. I think the next 10, 15 minutes we're going to see what kind of directionality there is in this move, and see what we want to do with this move. But as far as gold goes, you guys are telling me. Let me go back to gold. What happened here? Wait, what? Where's my other gold? What happened to my gold? Oh, did I blow up the? I blew up the gold. I must have closed out the gold trade. Let me share this with you. Yeah, gold is. Are you guys seeing this? Oh no, you're not seeing anything. Okay, hang on. All right, you know what we're gonna do? I'm done with this tap thing. I really despise the tap thing. Let's go to the full window. Share my whole window. This way I can move around. So gold is really declining hard here. NASDAQ is coming down a little bit. So we'll see if we get a move on the NASDAQ here. Nothing going on here. See if Jerome's still talking. He's still talking. Okay. This give us a little bit of a red signal, and we actually turn a little positive here. Let's see if we can make that target. Oh, well, so close. Press conference is over. Let's see what they want to do. Oh, looks like they want to run it. Still very choppy, man. Very choppy. Wow. This was the FOMC announcement. This is the highs. This is what they're trying to run. I'm just waiting to see, what happens at these lines, and then we'll react accordingly, depending on what the price action wants to do. If you guys are in wealth charts and you want dots only, if you want to just dots only function, you go in here, you go into the BK scalper indicator, you click on this, and what you want to do is go into parameters, and you want to show stop target. That's the one you want to choose. That will give you dots only. Show stop target. Okay, that's the one that will do that. Why can't I close this? Okay. If you want the indicators, you can get them over here. Here's the link to get everything we need. Those of you guys who are new, who also just want to join our room for free, here's a free join link that gives you access to just the basic information, the courses, but not the indicators. If you want the indicators, the link that I gave you is the link you need. So a pretty big battle between the bulls and the bears right now. We're kind of at a standstill. He's done with a presser. 30 minutes left of the market. Let's see what they want to do. Three seconds left on the clock for this candle. $1.37 on the clock for this candle. $105 on the candle. All right, we finally get done. Now, this was truly an exercise in patience. And now, just watch this. We got 27 seconds left. I'm going to press this trade because this is a sell signal for us. Trend is down. Momentum is down. I'm going to sell this one more time when the candle closes at 14 seconds left. Three, four, two, one. Sell. All right, short this. Stop is going to be right over here. Put a target over here. Let's see if it wants to come down a little bit. Give me a little bit more love. See if it wants to press me down a little bit here. And we're coming in. Oh, did it get done on the second one? I got done on the second one too. Sorry, I wasn't even watching. So I'm traded very, very small today with you guys. But frankly, what I was going to say to you is if I was zoned in, and one of the things I'm going to talk about in coaching is when this thing went short, right? We held on for like 10 minutes before this thing resolved our way. Once it gave this signal, I would have gone large on the big size because that gave you very good clue that there was going to be continuity. And I could have made, probably 10 times the amount of money. I don't want to, during FOMC, I don't want to show you bad habits of large sizing trades, but we could have done that just as well. So best trade of the day. Yeah. Which was what? The last trade of the day, right? Everybody got done, right? So everybody got that last trade of the day, got it all done. So anyways, good day, guys. We're all green for on the day on FOMC. Only one out of, I think, 8 trades we got clipped on. Everything else really worked out nicely, although it took a very, very long time to wait. I hope you guys really enjoyed the I really like the wealth charts look. It kind of, it shows you, it tells you exactly where I'm in, tells you exactly where I'm out. So you can totally follow the narrative of the trade. Hope you guys really, really enjoy all of that. Again, you guys want the deal. The deal is this. I'm going to give you 3 wealth charts accounts for free on prop, 50K accounts. So you can trade with me if you take this deal. Here's the link. If you guys want it, go for it. Hope everybody enjoyed it. Thank you so much, Dennis. I'm glad you guys liked it. Who's new in the room? Liked the trading, like the and I didn't even curse today. I did not even drop any F-bombs. I don't know what happened to me. I must be really, really losing my edge here. But no, I'm basically just trading the strategy, so it's making me a lot calmer. I'm not like a monkey on a, or like a, what is it? Hamster on a treadmill, whatever. Well, I'll be using any of the wealth charts indicators with mine. I'm just using mine. What do I need to anything else? A wealth charts is great, but the whole point is to keep it simple, keep it directional, and keep it, the reason I created my own indicators because that's all I needed. So yeah, no, we're just using the scalper. I'm only using 25% of my indicator. I'm not even trading some of the other strategies in there because I'm just trying to keep it as simple as possible. I give you lots and lots of possibility. But you see, by the way, you see the waterfall. You see how the wave broke. The wave broke, and it was just so cool. We could totally see this was the signal. This was the signal. We've entered short. That was that would have been another good 20, 30 points. So that's it, guys. Have a great night. We will say today's Wednesday. I'll see you guys tomorrow, regular New York time. And then I'll see you tonight in Asia. Okay, that will be the play. And then I'll see you guys for coaching tomorrow night. Private webinar, private link, private everything. The only people who are going to get that link are the ones that sign up for this bundle deal. So I'm not going to release the link until tomorrow. So 7 p.m. Thursday, New York time. Okay, don't worry, it's all going to be recorded. You'll get on-demand video if you want it, but it's going to be very interesting. I'm gonna share my my technique at how I took two $50,000 accounts in 3 days and funded both of them, and I'm probably going to hopefully do the same thing with these guys relatively soon. Okay, thank you guys. Everybody have a wonderful day. Good trading today. Thanks a lot. Take care, guys. Bye bye.